Did you know that one of the largest Canada Mortgage and Housing Corporation-backed loans ever issued is helping to transform Toronto's West End? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In an exciting development for Toronto's multifamily real estate scene, Hazelview Investments has secured what they describe as one of the largest Canada Mortgage and Housing Corporation insured loans ever issued. This funding is part of the MLI Select program and is crucial for the completion of a massive multi-tower apartment project at Bloor-Dufferin in Toronto. The development will feature 856 units of market and affordable housing spread across a two-tower plus podium building and a mid-rise tower. Michael Williams, managing partner and head of real estate development at Hazelview Investments, shared with Real Estate News Exchange that the project also includes significant community benefits. These include a new affordable building with 56 units, a public park, community center, daycare, a public road, and even a Toronto Transit Commission tunnel. The community benefits package is valued at a staggering $79.8 million, including a $12.5 million cash contribution for a land trust aimed at new affordable housing projects. The financing, provided by First National Financial and insured by the Canada Mortgage and Housing Corporation, is part of a larger Bloor-Dufferin development that will eventually deliver over 2,000 apartments in 2 blocks. Hazelview is partnering with Fitzrovia on this ambitious project. Although the exact amount of the loan wasn't disclosed, Williams emphasized its significance in supporting the development's timeline, with occupancy targeted for the latter half of 2026. Williams highlighted the nationwide importance of purpose-built rental housing, explaining that it addresses critical issues like affordability, accessibility, and urban density. He stated, "Purpose-built rental housing plays a critical role in addressing affordability, accessibility, and urban density challenges across the country." The MLI Select program offers financial advantages that enhance the project's viability and long-term value creation for investors, while incentivizing the construction of rental housing in Toronto and beyond. Hazelview's experience with Canada Mortgage and Housing Corporation financing adds another layer of confidence to this project. Williams noted that Hazelview has previously secured funding through the MLI Select program for other developments, such as the 205 Queen Street project in Brampton. This familiarity with the application process ensures effective execution within the policy framework, despite its evolving nature. As construction progresses, Hazelview is preparing to market and lease the apartments, which will feature a range of indoor and outdoor amenities. The 2 towers and 7-story podium will boast approximately 14,000 square feet of interior amenity space and 12,000 square feet of exterior space, designed with a hotel and restaurant feel. Amenities include a gym, party rooms, kids' room, theater room, guest suites, barbecue areas, and an outdoor garden, with retail spaces facing the park at ground level. This project is a shining example of collaboration during challenging times, bringing together municipalities, developers, engineers, and construction teams to deliver much-needed housing in a tight market. As Hazelview retains ownership of the properties, the City of Toronto will manage the additional 56 units in the 8-story building designated for affordable housing. It's a testament to the power of creative solutions and public-private partnerships in addressing the housing crisis. Avenue Living has been making waves in the multifamily and self-storage sectors, achieving a remarkable milestone by surpassing $8.5 billion in assets under management. This follows a year marked by acquisitions totaling over $1.2 billion. The Calgary-based firm has expanded significantly, adding $730 million in multifamily residential assets and $500 million in self-storage properties within the fiscal year. This aggressive growth strategy underscores their focus on workforce housing and high-demand storage markets across Canada and the United States. Founded in 2006 with the purchase of 24 rental units in Brooks, Alberta, for just over $3 million, Avenue Living has grown exponentially. Founder and Chief Executive Officer Anthony Giuffre told Real Estate News Exchange, What we've tried to build is a transgenerational platform that focuses on real assets, real results, and real operations. Giuffre emphasizes that Avenue Living's approach is driven by operational efficiency and sustainable growth, with no specific size target in mind, but rather a focus on seizing opportunities that add value for stakeholders. Avenue Living's acquisitions have been diverse, with their multifamily fund acquiring over 3,580 residential units in locations like Iowa and Kentucky. This expansion solidifies their position as a top 10 institutional owner-operator with a total of over 21,500 units across Canada and the U.S. In the self-storage sector, their mini-mall storage properties fund has acquired approximately 1.8 million square feet in U.S. markets, including Atlanta and New Orleans, reinforcing its position as a top 20 storage owner-operator in North America. Co-founder and Chief Investment Officer Jason Jogia described the year as very robust for acquisitions, particularly in the U.S. multifamily space. He noted that these assets often come with larger suites and improved amenities compared to Canadian counterparts, offering an opportunity to diversify geographically while maintaining their focus on workforce housing. Approximately 25% of Avenue Living's multifamily portfolio is now in the U.S., where they continue to seek larger communities for greater efficiency in property and asset management. In the self-storage sector, Avenue Living is focusing on Sunbelt markets with significant population density, such as Atlanta, New Orleans, and Memphis. Giuffre highlighted that rising housing costs and increased consumerism are driving demand for storage space. Meanwhile, Jogia pointed out that the rental market is organically growing due to declining home ownership rates, fueled by migration patterns in both Canada and the U.S. Avenue Living's strategy includes maintaining well-managed, reliable assets that meet these evolving demands. Avenue Living's financial strategies are noteworthy as well. In May, they received an investment-grade debt rating and issued $250 million in unsecured notes. They've also launched a global $350 million expansion offering, already oversubscribed ahead of schedule. Jogia noted, "There's not a lot of players within the multifamily space that are rated investment grade or rated at all today, and that gave us some great access to liquidity to continue to play into our asset plans. This financial strength supports their ongoing expansion and diversification efforts." It's clear that Avenue Living's strategic focus on operational efficiency, market diversification, and stakeholder value is paying off. Their continued growth in both multifamily and self-storage sectors, supported by strong financial strategies, positions them well for the future. As they expand, they're setting a strong example for others in the real estate investment community, showcasing the potential for growth and success through thoughtful, deliberate action. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.